Hey everyone, I'm Susanna Hatfield with ATBS. Today I'm joined by Michael Schneider, who is our Manager of Tax Services. And we're just going to do a quick video to tell you guys some of the things that have changed this year that you need to be aware of as far as filing your taxes. So thank you, Michael, for joining us today. We just have a few questions for you. So first of all, tell us what's changed with per diem.
Sure. So those who didn't notice, the per diem did change this year, and by this year I mean 2021. So the per diem rate usually changes October 1st. So from January 1 to September 30th, the per diem rate was $66 a day. Starting October 1st and going forward now into 2022, it's $69 a day. Additionally, the IRS has changed the rule temporarily for 2021 and 2022 to allow 100% deduction of your per diem deduction. So that is an initiative to help restaurants and the economy. So definitely take advantage of that full 100% deduction for these next 2 tax years.
Great. Tell us a little bit about how the American Rescue Plan Act is going to affect taxes this year.
Yeah, so some may remember that's the act that passed on March 11th of 2021, kind of right in the middle of tax season last year. But that was responsible for the $1,400 stimulus check that went out to every individual. So that was really nice for a boost. If you didn't receive that, that is the deduction or credit, that you will claim on your 2021 tax return as you file that, coming April 2022 here. It's also responsible for an increase and enhancement in the child tax credit. So for those children under 6 years old, it was $350 a month. That total credit's going to amount to $3,600 on your tax return. So half of that was received July through December of last year, 2021. You'll claim the remaining half on your tax return when you go file that. If you didn't receive $300 a month for children under 6, then likely is because your child was over 6 years old, or there was some other income limitation. So either way it works out, your total credit will be claimed when you file your tax return, reduced by whatever you received July through December. The last item that was passed in that act was the dependent care expense. So that means for spouses who work, or if taxpayer's spouse works, and they have daycare expenses, you send your kids to daycare, there is an $8,000 limit, which is an significant increase in that expense, and you're allowed a 50% credit on that. So to make things simple, the credit is $4,000 per child up to 2 children. So if you have more than 2 children, you're both working, you're using daycare, the maximum deduction or credit is $8,000. The per individual is $4,000.
Okay. And a lot of people are starting to get into Bitcoin and other cryptocurrency. Tell us a little bit what's new with that as far as taxes are concerned.
Yeah, really popular. And I think the administration was trying to pass some tax law here early, but it just didn't work out. So likely more to come on some of those tax changes we're looking forward to. But really, the biggest change is they are going to start reporting in 2024. So look out for that for cryptocurrency. Right now, it's kind of speculative of what that's going to look like, but imagine stock reporting, right? So if you sell or exchange stocks, you get a reporting at the end of the year. Similar to that is what we're going to expect for cryptocurrency starting in 2024.
Okay. And then what do people need to do if they have distributed from their retirement accounts early?
Yeah, so last year, to help with COVID issues, you were allowed a distribution from retirement plans that was penalty free. So you still paid income tax on that, but it was penalty free, meaning if you weren't 55 years or older, you didn't have to pay all that extra penalty for withdrawing early if it was COVID related. In addition to that, they allowed you to repay some of that retirement distribution or even all of that distribution if you chose to. So if you do decide to repay some or all of that distribution, just make sure you're communicating with your tax preparer so they can go back and amend those tax returns and save you the income tax that you paid on those distributions.
Okay. And tell us what's new this year with the charity deduction.
Yeah, so an enhancement also to the charity deduction. Last year, you may remember filing 2020 returns. Each individual was allowed the standard deduction, and in addition to that, you're allowed a $300 charitable deduction. typically you'd have to itemize your deduction, so that would preclude you from taking the standard deduction. But that was a change last year where you could take $300 charity contribution as well as the standard deduction. This year, a little bit different. You can still take the standard deduction like you always have, but now it's $300 per individual taxpayer. So really what that means is if you're married, filing joint, you can take a $600 deduction, $300 each. So don't include children or dependents in that, but it's for taxpayers. If you're single, 300. If you're married, joint, 600.
Okay. And I know that inflation has been a big topic in the news lately. How does what are the inflation adjustments for the tax year?
Sure. So I'll look at my notes for this just to be clear, but the inflation adjustments that we're talking about are the standard deduction that we just touched on briefly. So just keep in mind 97% of truckers used the standard deduction last year. That's just the general benefit, over itemized deductions. But even the IRS has statistics that most people, over 90% of people, are using the standard deduction. So those rates increase typically each year, and I have those new rates for you here. So if you're single, that standard deduction is going to be $12,950, and that's up $400 from last year. If you're married filing joint, we're now over the 25,000 mark, which is surprising to some. So that's 25,100 for the standard deduction, which is up $800 from last year. And then there's the head of household. If you are in that filing status, that is 19,400, which is up $600 from last year.
Okay, great. And then tell me, did any changes happen with tax brackets for this year?
No changes to tax brackets. So we're still looking at the 10% is the lowest bracket, 37% is the highest bracket. Most truck drivers are going to fall in the 10 or 12% brackets. You may see a little bit in the 22%, but for the most part, you're still going to fall within the same brackets that you're familiar with or used to.
Okay. And as far as the Form 1040 goes, were there any changes to that this year?
There are no significant changes to that. You're going to see the recovery rebate credit is what the IRS calls it. That's where you report that stimulus check in the event you didn't receive it or received a partial amount and need to claim the remainder. And you're also going to see a line for the child tax credit. We talked about that credit also. So other than that, no real big changes. So a nice, change of pace from the last couple of years where we've seen major changes.
Great. This has been really helpful. Is there anything else that we should know about that truckers should be aware of for this tax season?
I will touch briefly on the COVID. I'll use the form number because it's familiar to me, but Form 7202. This was the self-employed credit you could claim if you were affected by COVID. This date range is not all year, so keep that in mind. If you were affected January 1st through March 31st and you missed work, even if you're self-employed, you're allowed a credit. So make sure you're talking to your tax preparer about that credit if you missed work due to COVID. And this is 2021.
Perfect. Thank you so much. Well, thank you for joining us. If you have questions about how we can help you with your business as far as taxes are concerned or continuing services throughout the year, please visit our website at atbs.com or give us a call, 866-920-2827. We'll see you guys again soon. Thanks.
Thanks.